Okay, let's take a look at exercise 9-15. On April 1st, 2020, the company purchased a trencher for $125,000. The machine was expected to last 5 years and have a residual value of $12,500. We are asked to calculate depreciation expense for 2020, that's the year it was purchased, and 2021 to the nearest month. And we're going to do it using straight line and using the double declining balance. December 31st year end. Okay, so for straight line, we start off the same as we normally would. The cost less the residual value divided by the useful life. So 125 minus 12.5 divided by the 5 years. The difference now, we would normally stop here if it was purchased in January 1st, for example, or January 2nd, like at the beginning of the year, we would take a full year. By using the nearest month, the partial year, we take a look and it's April 1st. Now, if it had been April 2nd, 5th, 6th, as long as it's over half the month. So here, April 1st, we're going to include the month of April. So April through December is 9 months. So then we take the full year amount for depreciation and multiply it by 9 months out of 12. So that's how much of the year we owned the machine, and that gives us $16,875. The next year we would have owned the machine for the entire year, so we just take the full 22.5. So again, when it comes to the month, if it's more than half a month, then you take the full month. If it's less than half the month, then you don't include that month. Double declining balance, again, you start off the same, so it's 2 divided by the useful life, so it's 2 divided by 5 because it was 5 years, which gives us a rate of 40%. So then we just take the cost of $125,000 times the 40%. That gives us the amount that we would normally take for a full year, but then we multiply it by the portion of the year that we owned the machine, which was 9 out of the 12 months, and that gives us $37,500. Then in year 2, it's the same as any other year. We take the cost less the accumulated depreciation, so the book value, times the rate that we calculated, 40%, and that gives us $35,000. So when we're doing it by the nearest to the nearest month, that only affects the year that it was purchased or the year that it was sold.